Hello and welcome. You with us here on Business Today. I'm Abha Bakaya. Here are the day's top business stories. Sensex gains over 400 points. Nifty shuts shop above 16,600. IT, oil and gas, metal, top sectoral gainers. JP Morgan chief Jamie Dimon warns of U.S. economic hurricane due to inflation, urges the Fed to take forceful measures to avoid tipping the world's biggest economy into a recession. Union Minister Hardeep Puri refuses to comment on the possibility of imposing a windfall gains tax on oil and gas companies, calling it speculative. He adds that taxation is the Finance Ministry's prerogative. The government has identified at least 3 public sector companies for divestment this fiscal. Centre is looking to execute the sale of IDBI, BEML and Shipping Corporation by March 23. That's a Business Today exclusive. Stage set for the release of Kamal Hassan's Vikram. The veteran actor returns to the silver screen after nearly 4 years. The 170 crore rupee film has already recouped its cost from digital, audio and other deals. Markets rebound after a 2-day hiatus. Oil and gas and IT shares rallying. However, losses in financials and FMCG counters limiting the upside. After a weak start, the Sensex staged a one-way up move and closed at 55,818, up 437 points. Nifty 2 rallied over 105 points to top 16,600. Big Boy Reliance was the top Nifty gainer, hitting a one-month closing high, giving Nifty a 68-point lift. Macquarie's positive note on Tier 1 IT companies led to TCS and HCL Tech rallying over 2%. Bajaj Finserv and Sun Pharma were other blue-chip gainers today. On the downside, Apollo Hospital, Hero MotoCorp, Eicher Motors, HDFC and Power Grid, the top Nifty laggards. Even as stock markets remain volatile, my colleague Sakshi Batra spoke with Sudeep Bandyopadhyay, Group Chairman, Inditrade Capital, to find out the best investment strategies to beat the summer heat. He listed out some stocks which he feels can help investors create a lush green monsoon portfolio.
Do you really expect some FMCG companies to really benefit, because a large portion is also dependent on the rural income from there? So is that a space that you're looking at?
Absolutely. In fact, a couple of FMCG companies I'll talk about, and they are very well poised even otherwise. But both these companies I'm going to talk about have got a fantastic rural distribution. Their product is genuinely appreciated and in demand in rural India. They have both innovated pretty well. They have handled and figured out a way of handling the cost pressures. Let's talk about the company specifically. Hindustan Unilever, I think, is the behemoth, the leader in the FMCG pack. Fantastic management, fantastic track record. One need not speak about that even. What happened is when the costs started moving up, the input costs started putting pressure. They did 2 things. They did selectively increase the prices, and they also did the smart thing of reducing the pack sizes. Now, both these things helps the company in protecting the margin. The rural demand was a bit of a challenge in the earlier quarters, but as we are discussing monsoon, if the monsoon is good, we know the market will be back. And with rural market coming back, Hindustan Unilever, with its unparalleled distribution network and range of products, will definitely benefit. I'll also add one more thing here. Hindustan Unilever acquired the GSK's food portfolio a few quarters ago. The full effect of that we haven't yet seen. We believe that over the next couple of quarters we'll start getting the impact of GSK's portfolio as well on HUL results. So make me extremely positive on HUL. Investors will do good to buy HUL slowly, of course, not rush into it completely, because market is volatile. We have a target of 2,500, 6-month plus time horizon.
Any other FMCG stock apart from HUL that you would want to discuss too?
Actually, the other FMCG stock I want to discuss is Dabur. Again, they are very well known for their rural distribution strength. They also have figured out ways and means of handling the cost pressure on the margins. And I believe that if the monsoon is good, Dabur's product and Dabur's business will significantly improve. Things have started looking up in rural India, and the inflation pressure, what we feel across the country, is more felt in urban locations and the urban locations. Rural India feels that a bit less, and if the agriculture is good, which should happen with monsoon being good, we will see a pickup in demand for FMCG products. Dabur will benefit. We will also find rural consumers uptrading. And that again helps Dabur because they have products in all price ranges. They have products in the lower price range. They have better products in the slightly higher price range. So the uptrading as well as increased demand will benefit Dabur. And Dabur, we have a target of 600. Period is 6 months plus.
Religare Enterprises was the darling of investors today. The stock skyrocketed over 11% after lenders to its debt-ridden subsidiary, Religare Finvest, agreed to consider a one-time settlement. Joining us, Dr. Rashmi Saluja, Executive Chairperson of Religare Enterprises. Rashmi, help us understand what has been communicated between you and the lenders consortium. We remember that RFL at the end of March 22 had an overdue of 5,344 crores, and Religare Finvest had also proposed a one-time settlement of 2,300 crores. Is that now agreeable to all the lenders?
First of all, let me tell you one thing, that we've been trying to resolve this issue since last 3 years. And in fact, in last 3 years, we tried to take advantage of a June 7th circular by RBI in which the debt restructuring of the NBFCs like this was possible. But unfortunately, with an investor that we did get that time, the restructuring didn't go through, and then we tried to also pitch in ourselves to continue with the restructuring, and unfortunately again that did not go through. So the efforts have been there since last 3 years, and then finally we did think of doing a one-time settlement with the lenders, and they are 18 in number, and we gave a proposal, and of course that proposal was in a situation so that we can settle all our dues in a way which is quite amicably a win-win situation with the lenders as far as the company is concerned. And we did give the offer, and of course after a lot of deliberation and everything, lenders gave us in principle agreement, which is going to be approved subject to the competent authorities of the lenders. And then subsequent to that, of course, it is going to take 3 months time to execute after we have repaid the money that has been accepted by the lender.
Could you also give us some clarity on the debt situation for the group as of now? After this settlement, what happens to the debt on the books of the company?
There is zero debt. We are a debt-free company, and I take extreme pride in doing that. So except for this NBFC, which after the settlement will also become completely a good company back in business. And as far as my REL is concerned, or broking, or in health insurance, we are a debt-free company. CIC has got no debt. We are completely compliant. We are SEBI 100% compliant, and of course we have no issues with the regulators. So that's the best situation to be in as of now.
Also help us understand, RFL was earlier banned from undertaking fresh businesses as it was under the corrective action plan of the RBI since Jan 2018 due to financial health. Do you think the RBI will remove that cap very soon?
So absolutely, we were under cap, and in fact we could not do any fresh business since 2018 January, being an RBI cap imposed on RFL. And to lift the ban, lift the cap, we have to follow the process in which the CRAR has to be adequate, and all the other ratios have to be met up with. So moment our settlement takes place, we are immediately going to be, it is going to be in fact completely pliable to all the ratios which are going to be positive. And subsequent to that, we will be writing to RBI, and I'm sure RBI is totally process driven, and of course they understand how things move. And yes, I'm very hopeful after this we will be business ready.
Could you also give us a timeline of by when you expect this to happen?
I think so. By next quarter, we should be in a position to do it.
All right, Rashmi, thanks so much for joining us today and taking us through all the latest developments there. India's largest car maker Maruti Suzuki India says it has sold over 1,61,000 vehicles in May, including exporting over 27,000 units as car sales rebound across India. The company's senior executive director Shashank Srivastava, who spoke with Business Today TV's Chetan Bhutani, says the semiconductor shortage that has caused delays in deliveries has somewhat eased. Here's an excerpt.
You mentioned that the chip shortage, the release in fact mentioned that the chip shortage has probably started having less impact now. So what are you attributing these factors to, and what is being done really to address that concern, and how are you managing that?
Yeah, so of course, as far as the availability of chip itself is getting better. If you recall, in September last year, we were just around 40% of our plan of production, which improved to about 90% by December, improved to 95% by March, and we are in that range of 90% to 95% in this quarter as well. So there has been improvement in supply is one part. The other is we obviously try to maximize the production because we make those adjustments between different models. Different models use different types of chips in different amounts, as you know. So we have been doing that to maximize production. And in fact, we have one of the largest portfolio, the largest portfolio in the industry. That helps us make that adjustment. Of course, the consequence of that is the waiting periods is not uniform across models. So there would be some models where you have excess, larger waiting periods, and that's a consequence of making those adjustments in production. But we have been doing that, and I would say successfully so, as you can see in the numbers.
So the exports saw about 27,000 odd units. What do you attribute these reasons to with high exports? Is the global demand picking up?
Yeah, so for the products that we are selling, especially in Africa, Latin America, the growth is pretty good, as well as the demand. We saw it last year also, by the way. Last year, we became the #1 exporter. We were always the #1 in domestic market, but we are also now the #1 exporter from India for cars. We saw 237,000 units which were exported. And this month, that is in month of May, we did that figure of 27,000 plus, which is the highest ever export in a single month. We hope that this trend will continue in this year also. And we have a very good portfolio of vehicles, especially if, in the emerging economies. The products have been doing very well.
Just last question, sir. As the chip demand improves and your margin specifically also starts to get better with that, the rumors of the price hike, where do they stand? Are there any price hike that you're looking at?
So really, we haven't decided. So I can't say yes or no to that question. But yes, profitability continues to be under pressure because the commodity prices, if you compare with what used to be 2 years back, have been extremely high, persistently and stubbornly so. So we were expecting a downward cycle on the commodity prices. That hasn't happened for various reasons, including the global situation. For different reasons, it has remained high. And when you look at some of the prices for which the government has made efforts for reduction, steel, for example, there would be some softening of the steel prices. But from levels which we saw 2 years back, 38 rupee a kg, it went up to 84 rupees a kg, might come down, but won't anywhere. We should be in that range of 70 or so. When you compare with 38, which the rate was in 2 years back, still very high. So the pressure on profitability, I think, on the commodities front still continues to be immense.
Union Petroleum Minister Hardeep Puri refuses to comment on the possibility of imposing windfall gain tax on oil and gas companies, calling it speculative. He adds that taxation is the Finance Ministry's prerogative. Listen in.
Windfall tax, I am not a tax person. I mean, these are Finance Ministry issues. But I would think that our present focus is on ensuring that we get access to energy at secure and affordable prices. That is the main thing. Now, some of the stuff that in any case exports will take place. I mean, like we import crude from one country to the same country, we export high-speed diesel. So these are processes which go on. The rest is all speculative.
So there is no...
No. You are asking me to comment on a speculative report and say that means there is no such thing. That's not a way of... how would I know?
The government has identified at least 3 public sector companies for divestment this fiscal. According to sources, the centre is looking to execute sale of IDBI, BEML and Shipping Corporation by March 23. With its disinvestment target missed by a large margin last year, the government is sparing no effort to achieve this year's target of 65,000 crore rupees. Karishma joins us with more on this. Karishma, are we looking at disinvestment receipts to go beyond their target this fiscal? And which companies would be on DPAM's priority list?
Well, absolutely. You know, it's just not about the disinvestment target, but it is a bigger goal that the government is looking at, which is making a better out of this good asset. Now, sources are telling us that Finance Ministry is looking to put IDBI, BEML and Shipping Corporation of India on sale by this fiscal. They want to complete the process, and they also want to launch the process for Concord and Hindustan Zinc. In fact, I'm also being told for IDBI, most FinMin officials are currently in, few FinMin officials are currently in the United States of America to meet top investors to discuss on IDBI Bank, following which expression of interest could come out as early as July 1st week. 65,000 crore. For now, keeping in mind, despite market volatility, it looks like government is confident and enthusiastic to complete it.
All right, Karishma, thanks so much for that. Jamie Dimon, one of the most respected global business icons, has warned investors to prepare for an economic storm. Even as Russia's invasion of Ukraine plays havoc with economies around the world, the chairman of JP Morgan warned that interest rate hikes and high inflation could topple a lot of forecasts and budgets.
For economies taking a break from the COVID-19 pandemic, the calm was shattered nearly 100 days ago when Russian tanks thundered into Ukraine. Now, one of the most famous bankers in the world is warning of an economic hurricane on the horizon. 2 things are troubling Jamie Dimon, chairman of JP Morgan. One, he says, is the skyrocketing inflation, which is at a 4-decade high and shows no signs of easing. Second, Dimon adds, is the US Federal Reserve's quantitative tightening program, which he feels could lead to a high market volatility. Russia's war on Ukraine has ushered in an era of persistent inflation across the globe. US, one of the largest economies in the world, is witnessing an unprecedented rise in prices across the board. Fed Chair Jerome Powell, US President Joe Biden were in a huddle recently to decisively make a dent in an inflation rate that is running amok.
Chair Powell and other leaders of the Fed have noted at this moment they have a laser focus on addressing inflation, just like I am. And with a larger complement of board members now confirmed, I know we'll use those tools of monetary policy to address the rising prices for the American people.
The nagging inflation is at a 40-year high in the US. CPI inflation was at a record high of 8.3% in April in the country. Dining out is going to cost 6 to 7% more than the last year. As per the US Department of Agriculture, essential items in the breakfast basket are set to get costlier this year. Prices of eggs are expected to rise a whopping 19 to 20% in 2022. Dairy products will see a surge of 7 to 8% this year. Even cooking at home will cost US citizens 7 to 8% more. According to a survey by Gallup, the public confidence in US economy is at its lowest since the end of Great Recession in the early 2009. 77% of the Americans perceive that the economy is going to get worse amid record high gas prices and rising inflation. With inflation wreaking havoc and Fed sucking out the liquidity, a pessimism is hammering the US stock market. If analysts are to be believed, the US economy could be heading for a recession in the times to come. Bureau Report, Business Today TV.
Now, as the EV market in India gathers pace, Kia drives in with its flagship electric car, the EV6. The Korean car maker's newest offering will be available to Indian consumers at a price of 59.95 lakhs. Kia had initially opened bookings for 100 units but has received 355 orders. The deliveries of the first units of Kia EV6 will commence in September. My colleague Chetan Bhutani took to the wheels and also caught up with Hardeep Singh Brar, Vice President of Kia India. Take a look.
Well, Kia has officially launched its Kia EV6, a global hot seller. Remember, this vehicle where I'm standing next to has been officially launched into the Indian markets, and this comes as a completely built unit from Korea and is currently not made in India. However, Kia originally had plans to make only about 100 vehicles and sell about 100 vehicles in India. But due to owing to the demand, the company literally had to sell about 355 vehicles, of which now, out of 100, the demand is about 355 vehicles. So clearly, it shows that the vehicle is clearly in demand. The pricing is about 59.95 lakhs and goes to about 64 lakhs to the top end model. Coming onto the screen, one when it sits in the car, has a posh look of the vehicle. You're greeted with 12-inch screen on both the sides for the driver and for the infotainment system. This is the infotainment system, this is the driver system. Screen available here. The buttons here for operating the radio, for operating the air conditioner, for tuning your FM radio is very simple, sleek and to the point. The gear system here, the reverse, neutral and drive, and the P. It's in a circular motion pattern, which is almost a very high class model. Usually it comes in a wireless charger, a glass holder, and when it comes to the dash has a lot of plastic here. However, one would really expect that in such premium luxury segments, one would have a bit of a leather out there, but never mind, that's not a big disappointment. The good part about this is that one has a twice 12.3 inches screen that is tilted towards the driver, so that the driver does not really focus on the system and focuses on the road instead, and it's very easy to navigate the whole infotainment system. The vehicle is loaded with features, ADS features, safety features, and you talk about it, it's all available in the EV6. So starting from 59.95 lakhs, going to 64.96 lakhs, this vehicle is a hotshot seller for the electric vehicle market in India. It comes loaded with 2 chargers that Kia definitely plans to send across dealerships in India, and would be setting about 15 charging stations into the country. So in times to come, yes, this vehicle would definitely be a great hot seller for Kia EV. I would like to ask you that the price point of 59.95 to 64 something, do you think it's a bit too high for the Indian market, considering your competition who has a bigger market share has a cheaper price and a cheaper option, yet almost giving the same range? So how are you solving that problem, and do you think in the future we can get some cheaper products from Kia in India?
As I mentioned, we wanted to showcase the Indian consumer that what kind of technology we have in store across the globe, and we wanted to showcase the best to the Indian consumer, which is why we decided on the EV6. Yes, it is a premium, but as you can see from the numbers, people are loving it and they have latched on to the initial numbers that we announced. Yes, and to answer your question, we are looking at the future products which will come in due course of time. Our electric strategy is being finalized, and as we finalize that, yes, there'll be a whole range of price range that you will see, starting from where electric vehicles start today up to the EV6, which we have launched today at close to 59.95 lakhs.
Right.